Does Palantir's management really think the stock will exceed $50 in the next 5 years? Some may think so with the latest earnings report, as well as continue to double down in AIP demos and much, much more. So let's just get into the news. So looking at the stock first briefly, Palantir closed in the $21 range, right above it. So for those following closely the price, it's been pretty range bound in the lower 20s after earnings. So I'll continue to monitor here. Now, I don't see this often talking about the price itself, but my opinion has stayed the same. And maybe because people think Palantir dropping from 26 to 20 is quote unquote crashing after being in the single digits and teens all of 2022 and 2023. But honestly, I'm still surprised to be at this high price level, at least for my own opinion. But it's come down to it's simply a matter of perspective and time frame, but most importantly, what your own personal risk tolerance is. If you have 10K in a stock and it's 1% of your net worth, I'm sure you'll sleep fine at night. But if you have 10K in a stock and it's 90% of your assets that you own and you have debt payments and maybe uncertainty around income, that's a totally different story, even if it's technically the same amount of money. So price fluctuations like this are just normal volatility and business as usual to me when it comes to a stock like Palantir where anticipated growth is priced in, and any little or big thing that can change the trajectory or story around expectations can move it a lot. I mean, I've been saying it for a while. Palantir is expensive at face value, where the qualitative aspects for me personally show potential for growth or the opportunity to do so. But the big risk is still execution, and numbers are still forming to prove it. And my hot take is that 99% of people really don't need to invest in individual stocks, especially when there is uncertainty and a hefty premium, and you'll make more money upskilling and increasing your income to then invest in a passive and diversified way. So this channel really is to follow the news when it comes with Palantir. And if you're investing in individual stocks like Palantir, I'm a tiny resource that maybe could help bring things that went under the radar for yourself so you can make your own decisions without missing too much information. But the responsibility is still yours on a smart allocation suitable to your personal situation, but have at it on the comments. Now, news-wise, starting with short interest, it is basically flat with changing down to only 1.6%. So as of May 15, around 4.08% of the float is being sold short. So nothing alarming here, even after taking into account the price action when earnings was announced, when it basically flew up all morning before it was announced, and then after hours and the following trading day, it went down. Now, on Friday, for the start of the Memorial Day weekend, Palantir also filed their 13G on their Rubicon holdings. Palantir holds 7.9% of the outstanding shares, with 4.3 million of them. Note, though, they did decrease their position by more than 5% since the last filing, which is required for them to note on the 13G since they hold a significant portion of the company. Now, for me personally, I considered it a wash for this investment and not expecting anything from this, but if for some reason it pans out or maybe even breaks even, I'll just look at it as a bonus. Then we also start off the week with a lot of insider selling transactions, several forms of 144s, and then the form 4s later on. Subsequently, notably, we get a few sales from Alex Karp because of his different share classes, and he decided to sell a little bit over 900,000 shares, combined for a value of around $19.5 million. And of course, there were a bunch of other executives. So I went through a quick rundown on both sides of the story. I'm hearing from a lot of people in the comments on the daily video. It really comes down to your own tolerance for insider selling in comparison to continued stock-based compensation, as well as the dilution that comes there, and understanding what you deem appropriate for when and how much an insider should offload shares and if it's worth it, right? And it's a trickle that adds up over time for sure, but I'm looking more for the large non-trading plan related shares and sales there that they offload, and maybe that means something at that time. Now, we've also got a new blog post, Escaping the Cargo Cult. It's a long piece on their recommendations and perspectives on fixing the value chain for SaaS, and it comes down basically to a misalignment in goals and incentives. Hence, real issues aren't getting solved, or even if they do, it's super inefficient and roundabout, where in the end, no one still wins, and we end up with a system of almost like walking and going in a circle of almost fake achievements here. So take a moment to read it if interested. Essentially, Palantir wants to solve real issues. Then we get a couple demos this week posted, one with AIP Now Connected Construction, as well as another AIP Semantic Search. These are use cases to show off Palantir's AIP implementation and to certain use cases and being able to utilize the kinds of applications with pre-built modules related to what is actually valuable to your organization. So the cool highlight on the connected construction one I really liked is interfacing with the AI and being able to visualize the answer to your question on the 3D modeling. And then also the semantic search, which is a very common theme we always hear about now in almost demos, I would say, really being able to parse documents and the data in a meaningful way that can help build your application and search around keywords, but with a certain level of understanding and context that LLMs can bring. Then we get a new partnership with Protex, who builds out software solutions for different size organizations and industries around the world, and that's ranging from small, medium-sized businesses to large enterprises that Palantir already covers. Now, it basically is announcing saying that they'll be using Palantir's products to bring value to their clientele and can be seen as a consulting firm essentially that have expertise and the ability to guide organizations around using Palantir. And the big highlight for me was pointing out these small and medium businesses where it's another route for Palantir to keep trying to break into this segment of business size that they honestly haven't made too much progress in, at least from what we're hearing about. So it's still a tiny piece of the puzzle, but nonetheless, it's an avenue for them to break in. Then the biggest news of this week, at least in my opinion, after doing some digging into the latest earnings report and Arnie doing a nice post here, looking at the stock-based compensation section where we see the issuance of SARs or stock appreciation rights, where it basically is a strong incentive for the employees who can potentially get them and to help the stock price of whatever company they work at, right? Now, we know an individual contributor outside of the C-suite won't be able to do any financial engineering. So basically, it's a way for the motivation of these employees to do their small part to help with the fundamentals of the company and achieve their goals, which, over time correlates with stock price performance. So the big kicker, though, is that these were recently granted in Q1 2024. So it's a relatively new way for Palantir to compensate with more strings attached favorably to management and investors, and of course aligning with the stock price. So with an exercise price of $50, and some may see that as, oh, is that even achievable? And a $20 maximum per SAR means it's not worth anything to these employees unless it goes above the $50 a share. And this is over a 5-year period, so it's not some instantaneous kind of band-aid here, but it is something to motivate with the longer-term performance. So there's time to hit this, of course, but also it may be an additional variable to help management retain the talent of employees seeing progress towards this goal. And, if Palantir does perform well over time, it is actually going to be a stronger and stronger motivator since they'll feel closer to it. And a lot of folks probably wondered, why didn't Palantir always do this before? Well, probably did the math and it was obvious back in the single digits a couple years back that you probably couldn't get away with a $50 exercise price, meaning you'd have to not issue them, of course, which they did, or you'd have to rework it to a lower bar, but then you're going to expose yourself to more dilution at levels that management probably didn't see as difficult or as difficult to achieve, which is why it shows at least some perspective from management today, seeing $50 as possible to even $70 as attainable within the next 5 years. But I'll leave that up to you to decide as well on the realism, and if we fall short, it of course means the price didn't go up for investors, so that's disappointing, but at least you're not awarding more shares where the performance didn't meet the criteria. So it's a better way for management to manage the risk around stock-based compensation because the end goals align amongst investors now and management who has a large amount of shares, and of course the employees who want to hit that goal and get those additional awards. But what are your thoughts below? And I'll see you in the next video.